Good afternoon, YouTube. Today I want to talk about why the markets were so volatile. But before we get into it, I wanted to ask you guys to please hit that like button as well as the subscribe button. We're on our way to 300 subscribers, and by you guys liking this video and sharing it as well, it helps me tremendously. So I'd appreciate it very much if you guys did so. But that being said, I wanted to get into what's been moving the markets. So this morning, Donald Trump had a phone call with Xi Jinping in which they talked about terms on a new trade deal. They came to the conclusion that they would be sending out representatives to a neutral site to continue negotiations, in which went very well on this phone call. So the markets were very bullish. They even invited each other to their respective countries for a visit. And so everything seemed to be going right this morning, and we were honestly on a very bullish path. Now later in the day, you guys may have noticed markets started to sell off. That had a large part to do with Donald Trump and Elon Musk having a falling out. And if you guys aren't on Twitter, you guys have been missing out because they have been exchanging words like crazy, and it is worse than like hearing about your aunt's and uncle's divorce. Like, it's as bad as it gets, and you guys just have to check it out. So I will actually be dropping some of the tweets if they're not dropping on my screen already about this feud that's been going on. But what is this argument about, you might be asking? Well, this argument's about a few things. The first thing, people are skeptical about it being about the EV tax credits. I personally don't think that's a large part, but in the big beautiful bill, the EV tax credits are supposed to come to an end. We've been knowing this. I don't think that's a big issue. I think the big issue is Elon Musk was brought in to government responsibility through Doge to cut waste. And the whole point of Doge doing its job was to cut down on the budget, which then on top of that, Trump was supposed to do his job, and which was supposed to be delivering on tariffs to get tariffs at a point that it could pay down debt, was his argument, in which that has not been done yet. And all in the meantime, you have this big, beautiful bill, per se, that is going to be raising the country's debt by trillions, and none of this has happened. So you haven't cut any waste, Doge failed, your tariffs have failed so far, and then you're still proposing the bill that was supposed to be proposed for to have success off of cutting waste in your tariffs, in which those haven't happened. So the argument now becomes, why does this bill exist if we've already take two swings and a misses, and this would be the third, and this is the strikeout you're out moment right here, is you've made no progress on the country's debt, and now you're proposing we take on more debt. And that is where Elon Musk, I feel, stands, and why he's attacking this bill, in which it has now turned into a personal feud over the internet. So I want to talk about that, but now I also want to talk about how am I positioning myself in the middle of this madness. Well, I personally, I'm trying to stay in as much cash as possible. Now, none of this is personalized financial advice, but I'm not a fan of selling in fear. I feel like many investors lose when they sell in fear. It's just how the market works. It's usually when the market moves towards fear that the sell is pretty much over by then. And then you have to get ready to go. But the problem is you can't predict when the two are going to change. And so I don't try and play the market that way. I believe just time in the market's how you win. So I don't sell in fear. But what I am doing is I've been collecting premiums on cash secured puts and covered calls, which I've talked about in other videos. They're a great tool, I believe, in which I've raised about 3.7K in cash since all the tariff news originally started. Ever since, I've been just trying to add up cash, because my biggest regret on those big market pull downs was not having enough cash to meaningfully buy the dips. So I'm continuing to add to my cash, and I'm not really looking to purchase anything until I see a change in the current climate of the markets, and that is we either start getting trade deals done. A big one for me right now is actually seeing the macro environment data come in line and come in strong right now. It seems like unemployment's been ticking up. We got inflation rapidly declining, and then you got Jerome Powell saying, "I'm not going to cut rates." So those don't go hand in hand. I need to see once unemployment comes in this coming Friday, so tomorrow, and once we get CPI before we get the cut date. If everything is like it's still like all right, like it's not like we're in a recession right now. It comes in line, and then we get Jerome Powell talking about cutting rates, and he does cut rates here in June. That's when I'd be looking to deploy capital. But if we get, another June of Jerome Powell refusing to cut rates, and inflation doesn't at least come in strong, and the unemployment doesn't at least come in strong and lower than expected, then I will be in fear. And I will continue to hold cash waiting to buy the major dip. But if the major dip doesn't come because we get the cut and and unemployment stays around 4.3 and CPI's hovering around 2%, then I can get behind that. So I'm currently playing the waiting game. I'm not selling anything. There are certain stocks that I'm willing to buy at certain prices still. So like one is Hims and Hers. I'm willing to buy it at 45. I bought a lot in the 20s and told myself that, I'm buying a ton here because I don't want to chase up. And I've had a long time to collect in the 20s. So that is the one reason, like, although 52 had been a great support, I was like, it could definitely break it at some point, and I'd rather make 45 my buying. And at that point, you've had, I want to say, about a 30% pullback. So that is why I can back up buying at 45 for myself. For someone else who might be like looking to get in the stock, honestly, fair value for me is 70 to 80. So, if I was to just be getting in the stock, I'd be willing to buy it at these prices. But because I already built out such a strong position, I don't feel the need to. But like I said, nothing I'm saying is personalized financial advice. You guys make your own decisions off of your own educational stance on whatever companies you're in or looking at. So that is currently where I'm standing in the market, but I want to hear where you guys stand in the market, and as well, what do you guys think of this ongoing argument? It's definitely very interesting. I stand in the middle where I think they're both just speaking very emotionally. I do stand with Elon Musk in the idea that I don't think this bill should be getting passed. This bill was supposed to be a reward after successfully cutting down on government expenses and getting tariffs to start creating revenue for the government, and we haven't seen any success in either one of those fields. So why are we? It's like giving the kid the treat before he actually earned it. That's how I view it. Whether you agree with tariffs or you agree with Doge or you agree with the bill, I think it's common sense that we shouldn't be adding more debt before we found a way to trim it, at least back down, and make up the difference. I think that's a very reasonable way to think of it. But let me know what your guys' thoughts are. And if you guys enjoyed this video or this breakdown, make sure you guys hit the like button as well as hit the subscribe button. And if you guys shared this video, I'd greatly appreciate it. But I hope you guys all have a great day. I'll see you in the next one.